Good evening, investors. In today's episode of 24th September 25, first, as usual, we will do an overview of current market situation. Then, we will address a very important question that is it too late to buy gold? We will try to answer this question based on some past data and trend. Let's begin with our market overview first. Nifty 0.45% down, mid cap 0.88% down, small cap 0.55% down. But the interesting part in this consolidated market situation is that India VIX is very low at a level of 10.52. Now, for those who don't know, India VIX is nothing but in a layman language is an index of fear. This is chart of VIX, and you can see in the period of uncertainties and tough periods, for example, COVID, then your Ukraine Russia war, then your Indian 2024 elections, then tariff period. At all these periods, when there was uncertainty, fear among the investor, this index has spiked. At present, it is at an all-time low, indicating that there is no fear among the investor. There is full greed in the market. I know you will say it doesn't look like, but this is what the VIX suggests. The negative news for us is that FIIs, after almost a week of silence, they have again started their selling momentum. In last 2 days, they have sold almost 6,000 crores. Although at the time of recording this video, I don't have access to today's FII buy sell data, but I am sure by seeing today's market situations, FII will be net sellers only. Now, VIX suggests that there is no fear in the market, but the only sector which was in green today is the most defensive sector, that is FMCG. Other sectors, we saw profit booking, realty 2.49% down, railways 1.99% down, defense 1.17% down. In auto, in past two trading session, we saw a good run up, but today again a profit booking 1.15% down. Now, overall, while looking at this data, we can conclude that market is not able to move in a particular direction. As of now, I believe there are only two factors which can now push market forward. First one is a good Q2 earning which will start from 9th October with the TCS result, and another one is the positive announcement from Trump side over trade related tariffs, which I believe now no one knows what is going to happen, because lately I believe yesterday in United Nations again Trump has attacked India. In the ongoing United Nations conference, Trump again has given us the warning that if we don't stop buying oil from Russia, he is going to impose more tariffs on us. But this time, he has not targeted us alone, he has targeted China plus other NATO nations as well. I believe at this time, only God knows what is going to happen next, because I think even Trump doesn't know what is he going to do next. Now, between all this, gold is doing really very good, almost touching a new high daily. At the time of recording this video, currently gold is trading at a rate of $3,768 per ounce. Now, to answer this, you need to understand that gold is a commodity. It is not like a stock. It doesn't publish result. It doesn't give dividend. It has no cash flows. You can't do a valuation of gold that you can do in the stock. Gold is a pure game of demand and supply. Gold is considered as a safe haven asset, meaning its demand increases during the period of uncertainties. For example, suppose any geopolitical tension related to wars, or an uncertainty related to inflations, recessions. Even if there is an uncertainty related to correction in stock market, then also demand of this safe haven asset gold increases. Now, this raises another question, that are we addressing towards any period of uncertainty? Let's try to answer this. So yesterday, US Fed Chairman Jerome Powell has given a warning that equity markets, he was talking about US equities, are currently highly valued. Now, the role of Fed is not to comment on the valuations of equity, and neither Fed is concerned about the valuations of stock market, but his bearish speech has raised concern among the equity investors, and as the result, yesterday S&P 500 was 0.55% down and Nasdaq was 0.95% down. Now you will say, Arpan, it's just a minor correction in an ongoing rally, and everyone knows that rate cuts means rising equities. Now, if you're also one of those who thinks that rate cuts means stock market rally, then my dear friend, it's a very big misunderstanding from your side, and let me try to show you with some data. Now, you can see from this point that when somewhere around 2001, when Fed started a rate cut cycle, as you see, Fed was cutting rate at this time, S&P 500, instead of increasing as per the theory, has been corrected by almost 43%. When the rate cut cycle ends and Fed again started to hike rates, then we see a sharp increase in S&P 500. This rally noted a gain of almost 92% during the interest rate hike period. Again in the beginning of 2008, before the start of recession, when again Fed has started its rate cut cycle, we saw a deep correction in S&P 500 by almost 55%. Now you will say, Arpan, during the period of rate cuts, ideally S&P 500 or even any stock market should rise, and during the period of rate hikes, market should fall. Theoretically, you are right. But please note, theoretically you are right. But in practical, market participants are very estimate. They already anticipate when rate cuts are going to happen, and before that they already push the market towards new high. So first thing you need to keep in mind that it is not necessary that when rate cuts happen markets will rise. This time when Fed has again started rate cut cycles, they have a different problem to address. Currently inflation is very much above the Fed's target of 2%, but the problem is that job market is currently very weak in US. Fed is forced to cut rate to increase spending and in order to create more jobs in the economy. And this very problematic situation is called stagflation. Now let's quickly understand what is stagflation. You can see it is a combination of two words, stagnation plus inflation. Stagnation means slow or no economic growth. Inflation means price of goods and services keep rising. Now why is it an unusual situation? Because normally when growth is weak, inflation is low like in a recession, or when inflation is high, growth is usually strong like in a boom. But in stagflation, you will get worst of both the worlds. Economy is not growing, jobs are stagnant, prices are still rising, and rate cuts will add more fuel to rising inflation. Historically, in 1970s, US had faced this similar stagflation era, and during this era, stocks had underperformed badly until the rates were hiked aggressively. Now you will say that Arpan, stagflation will be in US but not in India. Why should we be worried? So my dear friend, as we all know that global economy is more or less dependent on US. So if US faces the period of stagflation, then it also won't be good for other global economies as well. Now if you don't know where to invest in the period of stagflation, then you can simply put a prompt on any AI tool, ChatGPT or Perplexity, that what is the best asset class to invest in period of stagflation, and the first answer you will get is gold and precious metals. Even historically in the period of stagflation, gold has performed better than equities and bond. Gold has outperformed almost 15 times during the period of stagflation. Now this doesn't mean that US markets are going to collapse from today. They continue to rise in momentum. Currently there is full greed in US equities market. Brokerage houses have given a very good upside on S&P 500, 10%, 20%. There's a good earning outlook as well, but keep in mind those who are sitting at low levels will plan exit sooner or later. Also, there is a very famous quote, be greedy when others are fearful and be fearful when others are greedy. So I still believe currently also it's not too late to invest in gold. Right now also is the right good time to invest in gold. And for today, that's it investors. I will meet you tomorrow.